Good morning, students. I'm
Good
sure
morning.
you all are doing well,
Yes, sir.
and I'm sure this is our previous class of revision. You have also started revision in the similar fashion at your end, right? Students, and somebody at the start of the previous class was saying that she was not able to understand how to handle. I'm sure by now you are able to handle these concepts, these points. Now I was talking about the previous chapter, ITC. So
Yes.
before I start with the next chapter, again, our same format. First, you tell me what are your doubts. Any topic from your syllabus. You can raise your queries, your doubts. First, I'll take your doubts. Then we go to our present topic. Today we have multiple topics for revision. I'll take you to each of them, and in the same format what we did in the previous class. That is, we go question answer format, so that you are not only prepared theoretically, you are prepared for the exams. But before that, you all tell me if there are any queries, doubts with any of your previous topics, or maybe any topic. See, today our topic covers next 4 or 5 chapters like registration, tax invoice. So you can tell me what are your doubts in that also, so that while taking the revision, I'll focus more on them. Similarly, in any previous chapter, if you have doubts, I'll take that also. So first tell me your doubts, students. Yes, students.
So actually जो रजिस्ट्रेशन एंड कॉम्पोजिशन स्कीम है उसमें जो एग्रीगेट टर्नओवर है और टर्नओवर है उसमें डिफरेंस है तो वो
वेरी गुड.
सब क्या डिफरेंस है
अच्छा, आपने एक शब्द इस्तेमाल किया एग्रीगेट टर्नओवर, दूसरा आपने शब्द इस्तेमाल किया टर्नओवर. क्या एक बार आप वापस देखेंगे कि वो सेकंड वाला जो टर्नओवर है वो सिर्फ टर्नओवर है, या इज इट टर्नओवर ऑफ स्टेट? Is that page open in front of you?
No sir just
No
I
problem.
have to see
No problem. So it is basically, there are two concepts. One is aggregate turnover. In the meantime, you can open the page also. And the second concept is turnover of a state. Now, what is this? The difference is that when you have to compute your eligibility for anything, like whether registration is applicable to you, whether e-invoice is applicable to you, whether 9C is applicable to you, whether quarterly or monthly turnover is filing of returns is applicable to you. So for all these things, the turnover that is seen is the aggregate turnover. Now, what is aggregate turnover? Aggregate turnover is the turnover of that entity. Like you are a company, you are a partnership firm, you are an individual. So this is what is entity, which we even studied in accounts. We call it as the entity concept. So aggregate turnover is the turnover which is seen at the entity level and which is seen at the pan India level, which means that if your existence is in multiple states, if you have multiple branches or even multiple businesses, but all under the same PAN number, all are considered as one for the purpose of computing the turnover. In short, aggregate turnover means your entity level turnover. First point. Acha, by that time, have you checked, beta? Beta, did you check?
yes sir
So what is the other turnover? Tell me. One is the aggregate turnover. The other turnover is only turnover, or is it turnover of a state?
one is aggregate turnover in a financial year exceeds some limit is there 20 lakhs 10 lakhs 40 lakhs for registered under GST in state or union territory.
Perfect. And other one? What is the other one, beta? The other is, as I was saying, it is turnover of a state. Now, I just explained what is aggregate turnover. It is your PAN level turnover. It is required to determine your eligibility for various provisions like registration, e-invoicing, then monthly or quarterly return filing. So what is applicable to you? Wherever it is linked to turnover, the turnover is the aggregate turnover, which is your pan India turnover, right? Now comes the second part. The second part is turnover of a state. Now let us say you are having presence in 5 different states. So by default, you have 5 different, you can call it as branches or business verticals in 5 different places. Now, when you have to compute your tax, the tax has to be paid state-wise, or let us say, I will say, has to be paid GSTIN wise. So let us say for 5 states, you have taken 5 registration because it is compulsory to take registration in each state. So you have taken registration in each state. Now, in this particular case, you are going to pay tax, or first you are going to compute your tax for each GSTIN, that is for each registration, which is here in this example, each state. Now, when you have to compute tax, the tax will be computed for each GSTIN for each state, and this is where the turnover will be different. This is the difference between aggregate turnover and turnover in a state. Is this clear to you, beta? Have you
Yes,
found
sir.
this other turnover? Is it turnover in a state? The other one which you are talking
The
about?
turnover of composition scheme it is given.
No, beta. So turnover of, again, that is where I am saying, beta. There is no concept like turnover of composition scheme in that. See, again, for
Okay.
determining whether you are eligible for composition scheme, you have to find out that upper limit of 50 lakhs and 1.5 crores,
Yes, sir.
right?
Yes.
If you are talking about that turnover, then again, that turnover is aggregate turnover. There is no turnover called as turnover for composition scheme.
Okay. In this, there is a aggregate turnover is not there. Okay.
Sir,
No,
it
this is
is there in
aggregate turnover.
ITC chapter, sir. It is there in the ITC chapter definitions, old study material 7.9.
Now,
That
please read whatever you are
turnover
saying.
in state or union territory.
Exactly. So this is that's what I'm saying. The second turnover is turnover in a state. And this is also used in composition chapter. If you read composition chapter, even in composition chapter, the same thing is used. What? Turnover in a state. Where it is used, so you have to multiply that composition rate of 1%, 5%, 6%, correct?
Yes, sir.
That is multiplied by turnover of a state. Why? Because you have to compute and pay tax state-wise. So you just said what terminology you use? Turnover of a state. So I'm exactly saying the same thing. There are only 2 types of turnover in the entire GST law. One is the aggregate turnover and the other is turnover of a state. But still, this is what is the conceptual point or the point. But still, if you have a question, please ask. I'll answer your question. Now ask me, what is your question? If firstly this difference is clear to you all.
No, sir. Clear.
Clear?
It is in yeah, sir. It is in input tax credit. I think this composition and both are means confusing. That's why it's
Hey,
in
so what is
input.
in input tax credit? What is in input tax credit? What is in input tax credit, beta?
No, sir, the definition of turnover in the state or turnover in the union
That is
territory,
even in the
the
that is
definition it
even in
has
the
been given in ITC chapter.
no, that is also given in the composition chapter. That is what I'm saying.
Oh,
In
okay,
fact,
okay.
in fact, composition chapter gives both definitions. Definition of aggregate turnover also and definition of turnover in a state. Why? Because firstly, you have to determine your eligibility for composition, correct? That whether you have crossed 50 lakhs, whether you have crossed 1.5 crore, that place you see aggregate turnover. And once you are in composition, you have to find out your composition tax by multiplying the composition rate by the turnover. Now, this second turnover for calculating your tax is turnover in a state. Am I clear, students?
Yes, sir. For calculating tax purpose, we have to take this. Okay, okay.
Because tax, as I said, na, you compute and pay tax for each GSTIN, correct?
Yes, sir.
So since you have to do it for each GSTIN, hence you require that, correct? Yes, chalo. Tell me, what else, students? What else are your queries, students? Any topic. But for this, it is very important. As what we did in the previous class, I will again request, please do that type of revision. So that when we are discussing, you see, revising again provisions will be of no use. You have to be specific while revising, and the specific point means revising as how you get questions in exams. It will automatically revise all your provisions as well. Yes. Anything else, students? Any more queries before I go to the next part of our revision, that is today's revision? Students, I'm waiting for your response.
Sir, regarding license office or marketing office in a state, when you're making a supply from that office and the supplier is having, he has taken registration in a different state, and
Hmm.
license office and marketing office is in a different state.
Okay.
So, in that license office, if we are not making any taxable supply,
Hmm.
then taxable supply, then he need not be registered in that particular license of his state.
Correct. So
So
this
if he
is
makes a taxable supply, then whether it will be interstate or intra, sir. Actually, Mr. A is registered at Delhi, and he wants to. He is having a license office at UP, and if at all he have to sell through his agent or somebody through at Delhi, UP, then if it is a non-tax, if it is a taxable supply, then whether that supply will be from UP or Delhi, since he is not having a fixed place of business.
see, the rule of registration under the GST law is every state from where, now this word is important, from where you make a taxable supply, right? You have to compulsorily register, assuming your turnover limit has already crossed. So let us say, as in your example, I have one office in Delhi which is actually making a supply. I have another office in UP which is only a licensing office. Now the first question that you have to check is my licensing office making any outward supply? Maybe answer is no. So technically, you don't have to take any registration in that particular state, which is in your example UP, because all my sales are happening from Delhi state. However, now 2 points. The day when this UP branch will start making any outward supply, you will have to take registration. Yes. Point number two, this is important. UP state is still not making any outward supply, but it is receiving inward supplies where input tax credit is charged, or sorry, where GST is charged, which can be taken as input tax credit. Now, here, this UP office, even though not making any outward supply, but in order that it can pass on the credit to its Delhi branch, which is actually making the outward supply, and this UP branch is working like an ISD for the Delhi branch. Now the UP branch will take a registration so that it can register as an ISD and it can pass on the ISD credit. So two cases you will take registration in your example for the UP branch. One, where this licensing office, that is the UP branch, starts making outward supplies. Or two, it has received input tax credit on inward supplies of services and it needs to distribute it to the Delhi office. Right? Just allow me a minute, please. Yes, beta. So I hope the query that you asked is resolved. Means, am
Sir.
I able to satisfy
Yeah,
you
yeah.
and you have understood?
Yes, sir.
Perfect. Yes. Next query, student. What is the other query? Any other query? Yes, students.
Sir, regarding Rule 10A, where the supplier has to give his bank account details either at the time of registration or within 30 days from the grant of registration. But, sir, in the textbook, it is given as 45 days. Whether it is 45 days or 30 days from the date of certificate of registration, and the other one is whether
Let's see.
or GSTR 1 or GSTR 3B, which we have to file, whichever is earlier. Rule 10A.
Let's see if I get the rule 10 here in the module. See, whenever you have a confusion, I always do one thing. I always go to the bare rule. So let me see if I can go to the bare rule. Or better, I'll open the act also parallelly. See, here you have rule 10A. So what it is saying? Rule 10A relaxes this requirement. So firstly, as seen in the diagram outlining the procedure for registration while filing the application of registration in the portal, in part B of the application, a person is required to furnish details of bank. However, Rule 10A relaxes this requirement to a limited extent. In pursuance to the same, the registered person is allowed to furnish information within a period of 30 days. 30 days from the date you are given the registration, or before furnishing the detail of outward supplies of goods, services, or both under 37, that is GSTR 1, whichever is earlier. So before you file your GSTR 1 or within 30 days of grant of registration, whichever is earlier. Now you said 45. Where are you reading this 45, beta?
Sir, I saw in the study material
Where,
which
where,
was
where?
the Rule 10A only.
So this is rule 10, na, beta? I have opened it
Yeah,
in front
that
of
is
me.
what, sir, because when I heard the lecture, sir told it is 30 days, but in the textbook it has been given as Rule 30 under
But
section
I'm
39.
opening our module only. You see, I've opened our
Yeah,
module.
yes, sir, I'll see just now.
There may be some confusion, maybe there may be some overlap. So you should always, whenever you have such queries now, you should fold the page or put that post-it tag.
Yes, sir, it is given in page number 8.52 of study material. It
8.5.
has 8.52 of the, this is the old study material.
So which,
8.5.
what is the heading in 8.52 of
Heading
the?
is furnishing of bank account details, Rule 10A.
So I think here in this new material it is 8.56. Is the same heading? Is this the
Yes, sir.
same heading?
Yes, sir.
So
But
we are
here it
reading.
has been, yeah, same,
So but
sir. But
it
here
may be
it is
amendment.
different, sir. It
It may
has
be
been
amendment.
amended, I suppose. Yes, sir.
Yes, yes.
Okay, sir. Thank you, sir.
So, but see, I always do one thing whenever I'm taking any class, especially in case of tax, I immediately one day before or 1 hour before the class, I download the latest material. So
Okay.
this is the material which I've downloaded yesterday night. So I will
Okay, sir.
request that you all do the same thing, even though
Yes, sir.
you may have
Definitely.
got the old copy, but we are having access to our latest material also. So kindly download that and study
Okay,
from that.
okay, sir. Thank you.
Yes. Yes, students. Further queries, please. Yes, students. Any further queries? No? Then now should we go to the revision part? Again, I'll need your help in reading. So again, we'll go exam point of view, that is question answer wise. Now today we have to cover these many chapters: registration, tax invoice, accounts records, payment, e-commerce returns. I don't know how many of that we will be able to cover, but whatever we'll cover in proper manner so that it should be helpful to you in your exams, right? Now, who will help me reading this question? Who will read the question for me, please?
Yes, sir.
Students,
Yes, sir.
please.
Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in a supply of ready-made garments in a multiple location, that is in Himachal Pradesh, Uttarakhand, and Tripura in the month of June. It has furnished the following details relating to supply made at such a multiple locations for the month of June. Himachal Pradesh, Uttarakhand, Tripura. Intrastate supply of taxable 2250 in Himachal and Tripura 7 lakhs. Intrastate
Amount you can leave. Amount you can leave. Yes.
Okay. With the help of the above mentioned information, answer the following. Determine whether Mahadev Enterprises liable to register under GST law and what is the threshold limit of taking registration in this case, assuming that it is not required to pay tax on inward supplies under reverse charge.
Okay.
Explain with
So,
reason
so, so
whether
we,
you're.
1 second. We'll go one by one. Right? Now, our first question is whether Mahadev Enterprises is required to take registration. Right? Now, when you have to decide whether a person requires registration or not, there are two sections that you have to refer to. One is section 22, which puts the turnover limits. And then there is section 24, which says you have made any specific transaction. Like, see why this is mentioned, because this is one of the specific transactions covered in section 24. What is that specific transaction? Where you have any inward supplies on which you are required to pay tax under RCM. So there are two sections or two provisions which determine your registration requirement. One, section 22, which says if you cross a particular level of turnover. Second, section 24, which gives a list of particular transactions, which if you are dealing in, you have to compulsorily take registration. Now, in section 24, the most important transactions which make you liable for registration are multiple, but two are the key. One, where you have any inward supplies on which you are required to pay tax under RCM because those supplies are covered in 9(3). So wherever on inward supplies you are liable to pay tax under RCM under section 9(3), you have to compulsorily take registration. This is one key point of 24 out of all the multiple points. Two, where you are making interstate supply of goods, not services, where you are making interstate supply of goods, or you are making online transaction again for supply of goods where it will be supplied interstate. That is, you are doing your transaction through some e-commerce operator, which is an app like you have registered yourself on Myntra or on this Amazon Prime, etc., where through that portal you want to sell your goods. So these are some important transactions which you have to keep in mind, because if you are entering into any of these transactions, section 24 triggers. If none of these transactions are entered into, then you have to only check the turnover. Now here they have mentioned that you are not having any inward supplies liable to tax. So one important transaction of 24 is not triggering. Second, in the list, you just see whether you are engaged in supply of goods or service. So we are engaged in supply of goods only. Now see, are there any interstate supplies? Because if you are entering into interstate supplies of goods, again, section 24 makes you liable for registration. And remember one thing, whenever we are talking about section 24, liability for registration, in that case, there is no, I repeat, there is no turnover criteria. Then even for 1 rupee transaction, you have to register. So fortunately, we are not having interstate supply of goods also. So in short, section 24 is not getting triggered. This is our first point. Now, once this is clear that section 24 is not getting triggered at all, because neither there is any inward RCM transaction, neither you have interstate supply of goods, or neither you are supplying your goods through any e-commerce platform. Now, in this case, the only thing that you have to check is turnover. Now comes section 22, and now comes the same point with which we started our today's discussion, that is, what is aggregate turnover? So aggregate turnover means turnover of all your outward supplies, whether taxable, whether exempt, whether interstate, whether export, makes no difference. All outward supplies. Inward you will not count. Only outward supplies you will count, point number one. Point number 2, while counting the outward supplies, you will exclude the amount of GST. So if by chance any supply is given inclusive of GST, you have to exclude that. Now, fortunately, they have already said that the amounts are excluding GST. So we want this amount only. And here you will not see whether it is interstate or intrastate. Third point about this aggregate turnover, which we discussed in our discussion at the start, that when you're taking or counting aggregate turnover, you have to deal with the entity level. So I will not see how much is in Himachal or in Uttarakhand or Tripura. I will make a total of all my branches. Correct? So these pointers you have to keep in mind when we are talking about aggregate turnover. So 2250 plus 7 is 2950. Then you have 6 lakhs, you have 21 lakhs, this is 27 lakhs and 2740. So this is 2740 and this is 2950. Adding both the two, whether it exceeds the requirement. Firstly, what is the total of all these turnovers? So 2950 plus 2740. 27.
56 lakhs 90,000.
No, 27 and 29. 56, correct. 5690, correct. So my aggregate turnover in this month of June, and why we are only considering June? Because they have given data of June only, maybe because they have just started the business. Otherwise, the turnover that we check is of last year and we take the turnover of the whole year. So aggregate turnover of preceding year, and it is for the whole year that we are checking. But I'm assuming that they have just started their business, and that is why only first month's turnover is given, because this is the month when they have just started the operations. Now, you are standing at 5690. Now we go to section 22 to check what is the amount of turnover that is required for registration. Now here I'll parallelly open the module again for only looking at the provisions part. Now if you go to provision from here, see, this is the most important table. What it says, now for the purpose of all these limits, the states are divided into two categories, special category and other states. Now, what is important about special category states? So there are different special category states. If I'm not wrong, presently there are 11 states which are defined or covered in the list of special category states. However, special category states are given a choice. What is the choice? Like other states are having higher turnover limit for deciding registration requirement, they are given a choice. They can remain at a lower turnover limit. Now, within the special category states, as you can see, some have opted for lower, some have opted for higher. Higher means the regular one. Now, firstly, let me tell you what is the regular one. The regular limit is if you are engaged in supply of services as well, then it is 20 lakhs. When I say as well means it may be only service or it may be goods plus service. But once there is a service, the limit has to be 20 lakhs. The limit that has to be checked is 20 lakhs. And where it is purely goods, no service, then the limit that has to be checked is 40 lakhs. So when you are checking the limit, you have to first see what are the limits. Now, these are your regular limits. First, for all transactions, mainly including service, 20 lakhs, and without service, only excluding exclusively goods, it is 40 lakhs. Now comes the point. You have to also parallelly remember that out of these special category states, which have opted for which limit. So as you can see, some have opted exclusively for goods. They have opted for 20 lakhs, not for 40 lakhs. And for services, they are ready for 20 lakhs again. So same 2020, but some have gone for 40 for only goods and for services 20. And then some have gone for 10 and 10 only. So this is where this will be slightly requiring some learning part, where you have to, like, for example, you have to remember these four names: Manipur, Mizoram, Nagaland, Tripura. These four have opted for 10-10 both, correct? And here then you have to remember this Puducherry, Telangana, which is 2020, correct? So this two categories you can make: Puducherry, Telangana 2020 you have to remember, and then Manipur, Mizoram, Nagaland, Tripura 10-10. Remaining all states, whether special category or regular, are 40-20. So this is how you will have to remember the limits. Now, interestingly, in our question, now, interestingly, the three states that we are having, out of that, one of the states, Tripura, is the one which has opted for the lower limit of 10 lakhs also. And maybe out of the remaining, some may have opted for 40, some may have opted for 20. Now I'm only talking about the goods limit because here we are only in the business of goods. So as you can see here, Tripura is the one which has opted for 10 lakhs for goods, exclusively for goods, right? Himachal Pradesh has opted for 40 lakhs. That is the regular limit. And which is our third state? Uttarakhand. Uttarakhand has again opted for 20 lakhs. So here, interestingly, in this example, you have all the three categories. One, who is in 10 lakhs category, which is Tripura. Two, Himachal, which is in 40 lakhs category. And three, Uttarakhand, which is in 20 lakhs category. Now, since all the three categories of states are covered here, how you will determine? The answer is, if you have crossed 10 lakhs, which is the limit for your Tripura state, what will happen? You are liable to take registration in Tripura because you have crossed the limit of Tripura state. And interestingly, the law says once you are liable to take registration in one state, you are liable to take registration in all the states. So let us say here, anyways, you have crossed 40 lakhs also. But for example, here, the total turnover would have been only 26 lakhs. Now, if it would have been 26 lakhs, which is not crossing 40, still you are required to take registration in Himachal Pradesh also, because you are liable to take in Tripura, you are liable to take in Uttarakhand because you have crossed those two states limits. But the rule is, even if you have crossed limit of one state, you have to take registration in all the states. This is what is the law. So we come back to our question, how we will present the answer. Again, three-step answer presentation. First, you will say that for the purpose of registration, either the entity should have entered into specified transactions of section 24, or the entity should have crossed the turnover limit as specified in section 22 bracket 1. Full stop. The turnover limits applicable to the given states for exclusively supply of goods is Himachal Pradesh 40 lakhs, Uttarakhand 20 lakhs, Tripura 10 lakhs. So first part of presentation is always giving reference of the provision. Again, I repeat one thing which I mentioned in the previous class. You need not use the technical section language. You can describe the provision or language, point number one. Two, you need not describe or write everything of the provision. You write only what is relevant to this question. Like I only mentioned that a transaction of 24. I did not name the transaction. Also, while mentioning the limit, I mentioned it the state-wise which are applicable. So my first para is about the provision. Now my second para is about applying the provision to the given facts of the case. So what I will say, the entity is not making any interstate supply of goods, nor the entity has any inward transaction liable to RCM. Hence, it is not falling in section 24. Now see, section 24 has other transactions also, but for that any data is not given. So we need not refer to them. Need not write that this is not applicable, this is not applicable, this is not applicable. No. You have to only write what is relevant. So only two things. One is they have mentioned interstate. It means there is no interstate. So you'll mention that because that is relevant out of 24. And second, you will mention that there is no inward transaction liable to RCM because that is also mentioned. Others, what is not mentioned, assumed is satisfied. Then The most important part, you will say that the turnover, total turnover or aggregate turnover for the purpose of determining the registration requirement means turnover of all states combined of taxable exempt goods, interstate, intrastate, export, everything combined. So total turnover. Now we'll write over here the amount that we just calculated, that is 5690, is 5690. And now you'll say that since this is crossing the turnover limit, hence the final answer, the last concluding paragraph, we are required to take registration, and we are required to take registration in every state. Every means not all the states, but these three states. Point number one. But wait, I have not yet completed because there is an exception to this. But first, second point, let us say I am tweaking this question. Let us say I'm changing the figures because of which the total turnover becomes 26 lakhs. Had it been 26 lakhs, then what you have written, the turnover is not exceeding the limit of Himachal Pradesh. But since it is exceeding the limit of Uttarakhand and Tripura, hence the assessee will be required to take registration in these states. However, now important, however, the requirement of law is that once you are required to take registration in one state, you have to compulsory register in all other states from where you are making taxable supply. Hence, in this case, even though the turnover limit from the perspective of Himachal Pradesh is not crossed because Himachal Pradesh has the limit of 40 lakhs, but since you are required to take registration in Uttarakhand and Tripura, hence you will also be required to take registration in the state of Himachal Pradesh. This is our answer. Now comes an interesting part. What is the interesting part? There is one more section, section 23. So I refer to 22 and 24, which tells you when you have to get registered. One is 22 is on the basis of turnover, 24 is on the basis of specific transaction. Then comes 23. 23 says or gives you again a list of those cases where you are not required to register even though you have crossed the limit of 22. It means 23 act as a exception to the registration section. Now the most interesting part. In 23, one of the situations is that where you are engaged exclusively in supply of exempted goods or service, that is your business is exclusively supplying exempted goods or service, you need not take registration. Point number one. Point number two, if out of different states, even one state is having exclusively supply of exempted goods or service, you need not take registration in that state. Now here we are having intrastate supply of goods, we are having intrastate supply of exempt goods, we are having intrastate supply of non-taxable goods. Now the point is, supply of non-taxable goods is also called as exempt goods. I hope you all know this. So non-taxable goods are also covered in exempt. So supply of non-taxable is also treated as exempt supply. Now, when I'm writing the final answer, I will also refer to 23 because my first answer is I need to take registration in all states. However, when I refer to 23, I find that Uttarakhand is a state which is having exclusively transaction only of non-taxable goods like maybe liquor, and supply of non-taxable goods is treated as exempt supply. Since it is treated as exempt supply and Uttarakhand is not having any other taxable supply, it is only having this supply, which is covered in the definition of exempt supply. Hence, the final concluding answer is, though liable for registration in all states, however, you need not register in Uttarakhand. So this will be the final answer. I hope this is understood and clear to everyone, students. Yes, students, if no doubts, can we proceed?
Sure, sir.
Yes, sir.
Please read.
Yes. Explain with reason whether your answer in one will change in the following independent cases. If Mahadev Enterprise is dealing exclusively in taxable supply of goods only from Himachal Pradesh. Second, if Mahadev
Okay. One by one, one by one. Now, what will be your answer, students? What will be your answer? If Mahadev is dealing exclusively in taxable supply only in Himachal, it means now they are changing that both in Uttarakhand and Tripura, in both states, your turnover is only from exempt. So let us say this is not there, for example. So Uttarakhand and Tripura both are dealing only with exempt supplies. So what will be your answer? Will your answer change?
Yes, sir. Mandatory, no registration because 40 lakhs turnover is the
So means what? So what will be your answer? No registration means?
threshold limit is not more than 40 lakhs. Therefore,
Our,
no
our
registration.
threshold, what is the total turnover we computed, beta?
Yeah, 59 lakhs. Yeah.
5690.
5690, yes.
So is it not crossing 40 lakhs?
It is crossing, yes.
So why did you say that it is not crossing 40 lakhs? See, you will not only check turnover of Himachal while deciding whether you are liable for registration, whether you are eligible for composition, whether you are liable for e-invoicing, for all these things. The limit that has to be checked is aggregate turnover. And aggregate means of the entity. So what is my
Okay.
entity turnover? My entity turnover is 5690. It is crossing 40 lakhs. So the only change in my answer is that now in this revised scenario, see, our original answer said that you are not required to take registration in Uttarakhand, but you are required to take in Himachal and Tripura, right? Now my revised answer is you are also not required to take in Tripura,
Yes, sir.
because now Tripura, they have excluded this, means they are assuming this 7 is also exempt in Tripura. Then Tripura will be dealing exclusively in exempted goods and also non-taxable goods. So both are treated as exempt supply. And hence now Tripura will not be required to take registration. So now only Himachal will be required to take registration. This will be your revised answer. Correct? Understood, na?
Yes, sir. Yes, sir. I have confusion. Yes, sir.
No problem.
Understood.
See, confusion is okay because that is the step to clarity. Confusion is the step to clarity. Chalo, next part B.
If Mahadev Enterprise is dealing in taxable supply of goods and service only from Himachal Pradesh. No, sir. This C we have to, no, right.
No, no, B.
If Mahadev Enterprise dealing in taxable supply of goods and service only from Himachal Pradesh.
Yes. So what will be now change in answer? See, basically what will change if you're dealing in supply of goods and service both. So now instead of 40 lakhs, you have to see 20 lakhs. That is the only change in the application of provisions. Correct? Correct, na? So till now we were checking 40 lakhs. In fact, anyways, we were not even checking 40 lakhs because one of the states is Tripura. You were anyways checking 10 lakhs only. But the difference which I want to mention is that here the difference would be it would shift from 40 to 20 in case of Himachal also. So now what will be the change in your answer as compared to the original answer in one? In original answer, our answer in one was that you have to take registration in Himachal and Tripura, not in Uttarakhand. So as per this revised data of B, what will be the change in answer? Change in answer?
20 lakhs limit is there, no, sir?
Correct. So now the only difference this information will create is that now even for Himachal Pradesh, the limit will be 20 lakhs. And for anyways, Tripura, the limit is still 10 lakhs. So for Tripura, there is no change. It is still 10 lakhs. So my question, What will change in the answer? Nothing will change. Because anyways, with higher limit also, you are required to register. Why? Because one of the states is Tripura, where the limit is 10 lakhs. So you have to register. Now, even if this has changed, still because of Tripura state, you have to still register. And anyways, the registration is applicable. In short, there is no change. The registration is applicable again for two states, which is Himachal and Tripura, not for Uttarakhand, because Uttarakhand is having exempt supply. So answer in B will not change. It will be still the same as we had in main question 1. Yes. Next, students.
If Mahadev Enterprises dealing in taxable supply of goods only from Himachal Pradesh and has also effected interstate supplies of taxable goods other than notified handicraft goods and notified handmade goods amounting to rupees 4 lakhs.
Again, see, if you have dealt with or if you have any transaction of interstate supply of goods, then no turnover limit has to be checked. Again, registration becomes applicable. Anyways, registration was applicable even without this. So again, my answer will not change in C. It will remain same as 1. That is, registration is required and registration has to be compulsory done for Himachal and Tripura. So because of this change, the only difference is that now turnover limits are not applicable. You have to compulsorily take registration, whether you have even 100 rupees turnover. So now without checking turnover limits, you have to go for registration in all the states. But again, as per section 23 exception, since one of the states is not having any taxable supply, that state need not take registration. So our answer in C will again remain same as question 1. I hope all the 3 scenarios are, or all the 4 scenarios are clear. First, the main scenario, question 1, and then the revised scenario in ABC. Correct? Students.
Actually, sir, in the study material, second A's answer is it is not be liable for registration because of this threshold limit.
1 second. So firstly, what is given? 10, 20, 40. Okay, threshold 10, 20. As per 26, it will include all supplies. Okay. Now, as per 247, exempt includes this. In the given case, Mahadev is engaged in exclusively intrastate supply of goods from Himachal, Tripura, Uttarakhand. However, since Mahadev makes taxable supply of goods from one of the specified special category states, it will not be eligible. So this was our first conclusion. So your limit for registration is now reduced to 10 lakhs, correct? Students. So first part, we discussed the same, that because one of the states is Tripura, now you cannot check 40 lakhs, you have to check 10 lakhs. Now what is your aggregate turnover, which is computed on all India basis? It is of all 3 turnover combined is 5690, which is exceeding 10. So he is required to take registration. However, since from Uttarakhand there is no taxable supply, so he is excluded from taking registration. So our part 1 answer is matching, correct?
Yes, sir. Second A's answer. Yes, sir.
Now, if Mahadev is dealing in supply of goods only from Himachal Pradesh, but this is not the question, na?
Sir, I think they are not considering Uttarakhand and Tripura states all together. They kept it
Correct.
aside and still they are considering only Himachal Pradesh in the
But
question.
that is not the question, na? What was revised question, or what was A? Mahadev is dealing exclusively in taxable supply of goods from Himachal. Acha, okay. So it
They're
means it
keeping
is.
aside those 2 states.
I interpreted it. I interpreted as if they want to say that from these 2 states they have supply, but that is of exempt. Okay, I'm sorry then. So here they have excluded, means A is they are not having the other 2 states. This is what
Yes,
is the
sir.
meaning of the question.
Yeah, then answer will change.
Yes.
Definitely.
So that is why, if you remember in the previous class, I had said what is very important. First step is understanding the question. Then only you can correctly apply the provision. Now here, I interpreted the question differently. I interpreted as if they want to say that there is Tripura, there is this other Uttarakhand, but it is exclusively exempt. Whereas their interpretation of this line is there is no Tripura, there is no Uttarakhand, there is only one state, Himachal. Now, if they are having only one state, then their aggregate turnover will be 2250. And if their aggregate turnover is 2250 and the limit applicable is 40. Why now 40? Because if Uttarakhand and Tripura are gone, so now limit will be checked from the perspective of Himachal Pradesh, which is 40, and then you are not required to take registration.
Yes, sir.
Yes, sir.
Again, I think then we'll have to revisit B also. If Mahadev is dealing in taxable supply of goods and service, again, this means that it does not have Tripura and Arunachal, correct?
And we have to take registration.
Yeah, but
since it crossed 20.
But the point is, your limit is changed. Huh? In A and B, now your limit is how much? Only 2250.
Yes, sir, but it has crossed 20, na, sir?
Yes, but now since it is also in service, no, but our answer is changing, though the final conclusion is same. But our manner of presentation is changing, because my earlier perspective was my total turnover is 5690 in all the cases. But no, in A and B, my total turnover is 2250. In A, since you are exclusively goods, 40 lakhs limit was applicable, so no registration. In B, goods plus service, so the limit has become 20 lakhs, so registration applicable. And C, Mahadev is dealing in taxable supply from Himachal and has also affected interstate. Again, my total turnover is 2250 in C, but since I have made interstate supply, even if it is of 1000 rupees, I'll have to now compulsorily register. So again, the final concluding answer of C is same, but our presentation is changing, because again in C you are not having two states, you are having only Himachal. So total turnover is 2250, but now since you have made one interstate supply of goods, you will not see the total turnover. Now you are falling in 24 section, which says that you have made any special transaction. Now you have to compulsorily register. Fine, students. So see, this is what is important. Interpretation of question.
Sir, B, can we discuss once more? Because B, I had a little bit of confusion.
See, firstly, the corrected interpretation of the question is in question number 2, you do not have the other two states. You only have Himachal, correct?
Okay.
Firstly, this is correct, na?
Yes, sir.
And you only have Himachal, and the aggregate turnover now of the entity is 2250, because if you only have Himachal, you have only one turnover 2250, correct?
Right.
Now, what is your issue in B? Tell me.
And my threshold limit for Himachal will be, means for other states will be 20 lakhs. So we
Not other states, beta. Why you are using the word other states? I don't have other states. Now I only have Himachal. This is what is the revised understanding. So our interpretation, my interpretation was different. I was interpreting that in all these cases, ABC, you still have other states. But now, once we saw the answer, the interpretation of the question itself is different. They want to say from the question that there is only one state, Himachal. The other two states do not exist. So you have business in only one state. Now how it is changing? So it is changing your total turnover. Now your aggregate turnover is only 2250.
Then also we are required to take the registration.
Why?
Because of goods and service, both they are supplying. That
is why now your limit is reduced from 40 to 20.
20 lakhs.
And you have crossed 20 lakhs, so Himachal has to be registered. Correct, beta?
Sure, sir.
Understood? Doubt clear?
Yes, sir. Sure, thank you.
Chalo, next question.
LMN Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sales product X, which is exempt from GST-wide notification issued under relevant GST legislations. Company sells product X only within the Tamil Nadu and is not registered under GST. Further, all the inward supply of the company are taxable under forward charge. Turnover of the company in the previous year was rupees 45 lakhs. Company expects the sales to grow by 30% in the current year. Company purchased additional machinery for manufacturing X on 1st July. Purchase price of capital goods was rupees 30 lakhs exclusively of GST at the rate 10%.
18.
However, 18%, yes, sir. However, effective from 1st November, exemption available to X was withdrawn by central government and GST at the rate 12% was imposed thereon. Turnover of the company for the half year ended on 30th September was rupees 45 lakhs. Examine above scenario and advise LMN Private Limited whether it needs to get registered under GST.
Okay, so we go by the first question first. Now, what is the scenario? Presently, you have only one product. That product is sold within the state, so there is no interstate supply. And secondly, presently, your entire sales are fully exempt because your product is falling under a notification, exemption notification. So X is fully exempt. So right now, what is the scenario? You have only intrastate supply, so 24 is not getting triggered. Also, you do not have inward RCM supplies. So because of both these, again, 24 is not getting triggered. And as far as 22 is concerned, turnover is crossing 40 lakhs. But the point is that you have exclusive exempt supply. So because of section 23, which is creating exception, since you only have exempt supply, that is why you are not required to take registration, at least as per the original question. Now, the difference happens from 1st November. 1st November, the goods X have become taxable. Some rate has been imposed. Now you have to check whether you are required to register. So what will be your answer? Whether now you are required to take registration post 1st November? Students.
Yes, sir, required to register.
Why?
So previously, because this was not a taxable service under GST as per the notification issued by the GST legislations.
So that is that the reason why you will take registration? In fact, because of that justification, you should not take registration.
No. Previously, we had not taken the registration. So now, as it has become a taxable service, so
Supply
we will.
of goods. There is no service. It is goods.
I'm sorry, so we will have to take the registration.
Will this be sufficient to give you full marks? Answer is no.
No,
You
no.
said previously it was exempt, now it is taxable. With only making taxable, only having taxable outward supply is sufficient for getting registration.
Sir, but the turnover of the company as on 30th September, they have given it is
That
45.
is what you have to check.
45 lakhs.
So firstly, see what are our steps. First, check 24. Are you having any transaction of 24? Is there interstate supply of goods? No. Is there inward RCM supply? No. Have you registered on some online portal? No. So none of these things are applicable. So 24 is not applicable. Now 22, you have to check the turnover. Now turnover, which turnover you have to check? Turnover of previous year. And if previous year turnover was not crossed, then turnover of the current year till the date. Anyways, both turnovers have crossed. Previous year also was 45 and this year also your turnover even, actually this should not be 30th September, it should be 31st of October because they are having the notification effective from 1st November. But anyways, the point is your turnover of previous year is already crossed 40 lakhs. So you are required to take registration in the current year. So after this 1st November, you should apply for registration. So answer is this. I hope you understood. Not only the answer. See, final answer will only give you half mark. What will give you full 3 or 4 marks is the reasoning. So first check 24, then check 22 till 31st of October. 23 was applicable because your supplies were fully exempt, so no registration required. But from 1st November, 23 is gone because now exemption is removed. So 23 will not save you. 24 still not applicable because you are not doing any special transaction. But 22 is getting triggered and your turnover of previous year is crossing 45 lakhs. So now you should apply for registration. Now I'll tweak the question. Let us say my previous year turnover was 30 lakhs. Then
a question, there is a query.
1 second, beta, let me complete now, beta. Let me complete. Don't interrupt. So I'm changing the question. Previous year was 30 lakhs. Now, did my previous year turnover cross 40 lakhs? Answer is no. But my current year turnover till this date has crossed 40 lakhs. So still I am required to take registration. See, this will be your reasoning and this will be the manner of presenting the answer to get full marks. Yes, now you can ask your question, beta.
So my question is like, do we need to mention section 24 also in the examination answer?
Always. First tell me whether 24 is making you liable to register or not.
Okay. From there.
In fact, before turnover, you should check 24, because you may not have crossed turnover, but still you'll be liable to register if you're falling in 24.
Fine.
So your first step is you should go to 24. Check out of those 10, 11 transactions mentioned over here, any transaction is satisfied. But as I said, practically from exam perspective, all those 10, 12 transactions not required because they cover some very specific transactions. But these 2, 3 are very common, which will be applicable in every question. So at least check those 2, 3 transactions. If nothing is mentioned about them, or if it is mentioned but you are still satisfying the requirements, then 24 is not triggering, but you will have to mention this. It will carry 1.5 mark to mention applicability of 24 and not fitting in 24. After only you overcome 24, not fitting in 24, then only you will see turnover. Till then, no need to see turnover. Because even if, let us say, the turnover is 5 lakhs, but you are covered in one of the transactions of 24, you'll have to still compulsorily register. Am I clear?
Yes, sir.
Perfect. Read B part.
The answer to the above question is an affirmative. Advise LMN Private Limited whether it can avail input tax credit on the additional machinery purchased exclusively for manufacturing X.
Now this is interesting. Now you had purchased this machinery on 1st July when your product was exempt. Later on, from 1st November, the exemption was withdrawn. So now your product became taxable. Now you are taking registration also. But now the query is, since now you are going to take registration, can you take the ITC of the machinery which was purchased in the previous part or the previous period when you were not registered? Can you take the ITC of that machine now? Students, can you take the registration now?
We can take according to section 18.
Yes.
Exactly. So the best part is you have firstly identified the correct section to check. So here you check section 18. Now, can you tell me as per which part of 18 you can take this registration, ITC?
Composition levy.
Are you in composition, beta?
No.
And if
In
you're
this
in
case,
composition,
we
then
will not.
anyways, there is no ITC for composition. So
Now,
anyways, your
for
classification is
tax
wrong.
credit, we can take. For input tax credit, in this case, we can take.
No, so beta, again, you are giving me final answer that will give you only half a mark. You said section 18, so I'm asking how on the basis of 18 you will get. So justify me using 18.
We are from exempt, we are going to be taxable. So proportionate ITC, which is after reversing 5%, I suppose, sir.
Okay.
Reduced, that we can take.
So is this the section 18 you are talking about in front of my screen?
We are switching to regular tax paying status. Yes, sir.
Okay.
Yes.
Now in this, which part you are talking about? Just read this.
The credit on it. No, no, this is not. No, this is registration. Regarding registration, they are mentioning.
Arey beta, but it is all, it is, you said 18. This is
Yes.
section 18 only.
Yeah.
And this is about what we are covering. We are getting registered, na? So it is in fact talking about the same
Yes,
scenario.
yes, sir. Because from exempt we have been shifted to taxable. Yes, sir.
And now mainly we are taking registration now. To read what is given here.
The credit on inputs held in stock and contained in semi-finished goods or finished goods held in stock and capital goods at the time of registration, voluntary registration, or coming into regular tax paying status is available in the following manner.
Now there are 4 scenarios, 1, 2, 3, 4. Now we'll have to check we are falling in which scenario. So first, you just read the 4 scenarios. Scenario 1. What is scenario 1?
Person who has applied for registration within 30 days from the date on which he becomes liable to registration and has been granted such registration. He is
Are we fitting in this?
No, sir.
No? Why no?
Acha. Exempt. Yeah. Yes, yes.
Into this.
But it is not within 30 days.
Why not? Beta, 1st November,
Because
you have
initial.
Beta, they have not given you when you have applied for registration in the given question. So we can safely assume na you will apply within the time. You crossed on 1st November, so first
Yes,
after
sir.
1st November only you will apply. Na?
Yes, sir. Yes, sir. 100%.
But anyways, go to part 2. Are you fitting in part 2?
Person who is not required to register but obtains voluntary registration. This is not 100%. No.
Okay. Now part 3.
Registered person who ceases to pay composition tax and switches to regular scheme. No, not this one.
Part 4.
Registered person whose exempt supplies become taxable supplies. So this is the one.
No, but you said 1, na? So are
No,
we in
sir.
1?
One is for turnover limit, I suppose.
You have to check 1 and 4 and tell me which one is applicable, 1 or 4. Because
Sir, it is 4
the
only.
answer is different in both. Your
4
answer
only.
will change.
4 only.
Okay.
Because first we'll talk about when you threshold limit, when if we cross turnover, I suppose.
No problem. See, you have to tell me what you suppose or what you understand. So I'm asking others also whether you are covered in category 1 or you are covered in category 4. 2 and 3 is definitely not applicable.
Sir, 1 I say.
Okay, Sachi says 1, Indira says 4. What about others? What do others feel? Is it 1 or 4?
4, sir.
Okay, Geeta also says 4, not 1. Okay, but Sachi says 1. Now let me first tell you what is the difference between 1 and 4. If you are fitting in 4, you can take even credit of capital goods with that proportionate method what somebody mentioned by reducing some credit of the earlier period, you can take credit of capital goods also. So your answer will be yes, you can take off machinery after obviously reducing some ITC for the previous period. But if you're in 1 does not covers capital goods, it only covers inputs. See the difference. 1, 2 inputs, 3 inputs and capital goods, 4 inputs and capital goods. That is why our categorization is very important, whether you are in 1, because if you are in 1, then your answer is no, I cannot take off machinery. If you are in 4, your answer is yes, I can take off machinery after reducing some credit. That is why this question of mine, whether 1 or 4, is very important. So you have correctly identified the provision, which is the first step. But now after identifying provision, the second step is you have to apply the provision to the given facts of the case. Now we have to test the facts and tell that which part of the provision is applicable. The provision has 4 parts, 1, 2, 3, 4. Which part you intend to apply here?
Sir, first, because they are taking first time registration. This first is for first time registration. I think so.
You have to tell me only what you think and let us change the word. Somebody said I believe, somebody said I think. Now change the word. As professional, you should say this is how I interpret. You should never say this is what I think, this is what I believe, because that does not sound professional. So whenever
Yes.
you are even writing answer or whenever you are talking to anyone, let us say client is asking something. Like people say, I'm only into consulting. When they come to me, I cannot say, I think this will be the provision. I believe this will be the provision. No, that is unprofessional. I will say, as per my interpretation, this is the answer. Why you are saying this, I understand, because you want to indirectly take that question of saying, sir, I may be wrong. That is okay. But see, we want to train ourselves to be professional, not only with the subject, but with the communication skills also, which is very crucial. If you tell, let us say you go to a doctor and the doctor is doing your some checkup and they say, he says, I think you may have cancer. Oh, no, maybe I believe you may have this. Will you be satisfied? But if the doctor says, see, as per your report, the impression I'm getting or the interpretation I'm getting is it is highlighting cancer or it is showing some implications of cancer, you will get a proper reply and you will go to the doctor again. Same thing is with you. See, we are doctors of costing, FM, taxation, law, audit, accounts. So use the correct language. Even while writing answers, don't say I believe, I think. You should say as per my interpretation. In fact, in exam, you should not even say that. You should say, yes, this is. Whether wrong, the anyways examiner will give wrong. Whether you write you think or whether you write this is. So you should write this is. Now, correctly pointed out by Geeta and firstly by Sachi, and maybe I don't know if somebody else has pointed out this, the answer is you fall in 1. See, why you don't fall in 4? Because the 4 starts with the word you are already registered. See the difference. 4 and 3 both starts with the word you are already registered. And only you are changing from one category. Like in 3, you are changing from composition to regular. In 4, you are changing from exempt to taxable. But you are already registered. And 1 and 2 applies to person. So you are unregistered right now. Because of some happening of 22 or 24, now for the first time you are taking registration. I hope everybody got this.
Sir, nice interlinking. I don't know this.
No problem, beta. See, with that is why I say you should, even if you would have read this 10 times, this interlinking you would have never understood. Because these things do not click until you have a practical question. That is why the best way of studying is taking practical questions, especially during revision. Now, see, maybe somebody will say, but sir, I don't recall the provision. No problem. Now you have provision in front of your mind. You can go and revisit the provision. Also, let us say you don't even know, like, I really appreciate somebody or many of you immediately said that yes, sir, 18 is applicable. So that is the first important point because that is the first thing you should know. But equally important is that when you know that 18, please read 18 now with perspective of the question and read it minutely. So coming back to the point, the answer is firstly you fall in 18.1, not 18.4. Why? Because 18.4 will apply only had you been already registered. And as rightly pointed out by Geeta and already by Sachi, that I'm taking registration for the first time, so I can never be in 18.4, though the scenario is exempt to taxable. So by default, I'm in 18.1. I'm registering for the first time, and because of this, unfortunately, I will not get ITC of my machinery. Unfortunately, it is sad to say this, but that is the answer. Fine, students, understood?
Sure, sir.
3 we need not go because 3 is exactly copy of 2. Maybe in different exams the sums have come. Everything is same, including the question A and B part is also same. So we can skip B. Question 3. Now we'll go to 4, but just give me 1 minute again, please. Students, since it is 8:20, I think we will switch the chapter, right? Because there are 5-6 chapters which we have to deal with today. Fine, students? Because anyways, this fourth question also is on lines of question 1. So you can always go back to question 1, or you can do it yourself. Fine, students?
Sure, sir. Thank you.
Now we are in second chapter, which deals with tax invoice, e-way bill, etc. So kindly read, someone. Someone please read for me.
Yes, sir. Jay, a registered supplier, runs a general store in Ludhiana, Punjab. Some of the goods sold by him are exempt, whereas some are taxable. You are required to advise him on the following issues: whether Jay is required to issue a tax invoice in all cases, even if he is selling the goods to the end consumers.
What is your
Jay,
answer? What is the answer? Now we are talking about records. What documents? So there are two types of sales which Jai makes. One is exempt, one is taxable. Now the question asked is whether in all cases, all means taxable, exempt, all, if he's selling to end users, means the final consumer, means we call it as B2C, whether any requirement that you have to issue or you can issue tax invoice only. Tell me.
For taxable, he will issue tax invoice. For exempt, he has to issue bill of supply.
Very good. So the answer is, in case you're a composition dealer or in case you're a regular dealer and making exempt supplies, for these two things, the law prescribes a document called as bill of supply. So this is the first point, that you have to issue bill of supply at least for the exempt goods here. However, so firstly, let me make the provision clear. So for exempt goods, you have to issue bill of supply. For taxable goods, you have to issue tax invoice. However, let us say you are a kirana shop, that is a grocery shop. When somebody comes to you, like in the morning, people are going to purchase eggs, raw eggs, then some items like butter, bread, etc. Now in this, raw eggs are 0%, that is exempt, and others may be 5% or 18%. Now in this particular case, when you have to issue invoice to one single person who is buying both taxable goods also, exempt goods also. Now in this particular case, how will you treat it? Whether
Sir, if it is B2C, we can give combination of tax bill of supply in single.
perfect. That is what I wanted to hear. Superb. So if it is B2C, and let us say one person only is buying both taxable goods also, exempt goods also, the law has provided for one more document, which is a combination of both. That is tax invoice come bill of supply. So the answer over here is, for B2C cases, I can issue. So if somebody is taking taxable goods, I will issue only tax invoice. If somebody is taking exempt goods, I will issue only bill of supply. But if it is both, I can issue tax invoice come bill of supply. Perfect answer. Continue. Next.
Jay sells some exempted as well as taxable goods valuing 5,000 to a school student. Is he mandatorily required to issue two separate GST documents?
Answer is no. We have already answered. Again, school student is a B2C supply. And if it is supplying both, it can issue a tax invoice come bill of supply. Third.
Jay wishes to know whether it's necessary to show tax amounts separately in the tax invoices issued to the customers. You are required to advise him.
So, is it necessary to show tax amount separately?
Yes,
Answer
sir.
is
Yes, sir.
100%. You have to show separately. So whenever you are making a taxable supply and you are not a composition dealer, you have to compulsory show tax amount, that is GST amount, separately. Perfect. Next one.
Avatar Enterprises Kanpur started trading exclusively in Ayurvedic medicines from July 1st. Its turnover exceeds 40 lakhs on 3rd October. Firm applied for registration on 31st October and was issued registration certificate on 5th November. Examine whether any revised invoice can be issued in the given scenario. If the answer to the first question is an affirmative, determine the period for which the revised invoices can be issued, as also the last date to which same can be issued.
Good. Now I'm asking you all a question, which is again obviously related to provisions and concept. What is a revised invoice? Can anybody tell me? So they're talking about some revised
Yes.
invoice. So what is that revised invoice?
Yes, I know. Means revised invoice means when we are registered and we get registration certificate. At that time, we have issued the invoices.
ठीक है.
उसमें मीन्स टैक्स इनपुट मतलब टैक्स नहीं होगा उस उन बिलों में, तो बाद में हमें टैक्स लेने के लिए ये रिवाइज्ड इनवॉइस इशूड करना है. मीन्स इतना हम करते हैं.
Okay. Good. See, you are perfect, but I'll just slightly fine tune this. So firstly, one doubt I will clear, that revised invoice means I have made an invoice and now I'm correcting the invoice because I made a mistake. This is not revised invoice. Firstly, this is not revised invoice. I cannot correct
This
the
will be a
invoice.
GST tax.
Sorry, please repeat.
Then it will be a GST invoice, means tax invoice, we can say.
No. So firstly, see, I'm talking about a normal scenario. I've issued invoice and I find some mistakes in the invoice. Now see, normally when we say revise, what it means, you take the same invoice. In that invoice, you do the corrections. Let us say you typed some wrong amount or you put some wrong GST rate. So you correct that and give the same invoice again with correction. This is not allowed in the GST law. This is what I want to highlight first. I hope this is clear.
So, but in that last invoices, there is no tax rates are there, no? So in new invoice, they will with tax rate.
Firstly, I'm not talking about the present scenario. I'm first talking about a normal. See, you are normally, let us, you're already registered, you're running business. I'm trying to explain because this is a misconception about revised invoice to many people. That revise means what? I can do correction on the previously issued invoice. So let us say I issued some invoice last month, regular invoice, normal invoice. I'm already registered. I'm not talking about this question particular.
Okay.
Right. So point is, I normally issued the invoice. I'm already registered doing business for many years. I found a mistake in the invoice. So this month I decided, okay, I'll take the same last month's invoice, change the invoice and give it back to you. Answer is this is not allowed in GST. This is not revised invoice. If you need to make any corrections, you have to use debit note, credit note. That is what I want to highlight. Point number one. Now coming back to this scenario. What is a revised invoice in GST? Let us understand the provision first and then we will apply it to this particular case. Now see, we studied previous chapter, which is registration. What does the registration chapter says? The registration chapter says that whenever you are doing business and the moment you are liable to take registration compulsorily, like here in this case, you are liable to take registration on 3rd of October because your turnover has crossed the specified limit. But the law gives you 30 days to apply. If you have applied in 30 days from the date this trigger happens, thereafter, whatever time it takes for registration, that is not your headache because anyways, you were only supposed to apply. The further step is by the department officer. So if you have applied within time, your application has gone within time, that is 30 days. Now the law says two benefits will come to you. So in this case, you applied on 3rd October, but actually you got the registration on 5th November. Let it be 5th December, let it be 5th Jan. Because now you applied in 30 days because you applied on 31st October. So you have done it in 30 days. Now, whether the registration comes on 5th November, 5th December, 5th Jan, for you, two things are secured. First, what is secured is you will get all ITC from 3rd October onwards only, even though you get registration certificate late. All your input tax credit coming from 3rd October onwards. That is the date on which you became liable to register. See, you became liable on which date? You became liable on the date when the turnover crossed the limit. In this example, it is 3rd. So you are liable to take registration from 3rd October and you have applied within 30 days. Now, even after 4 months, if the department gives you the registration, you are set to be registered from 3rd October. This is the first important point. Your effective date of registration remains 3rd October. Firstly, is this clear? Now, two benefits of this. Point one, all purchases from 3rd October onwards, you can ask them to give you the ITC. How? You will give them your registration number which you have got today, but they will do amendment using the amendment table and they will give you the registration. They will pass on the ITC. Second benefit at your end is, now from 3rd October onwards, whoever came and purchased from your shop, you knew that now I can recover tax. But the problem is, you could not give them a proper tax invoice showing the tax amount and collecting it because you were unregistered. So, what practically you have to do, you should do, and you do is you tell all your customers, "Ki boss, I am now liable for registration. I will be applying in 30 days and I will be getting the registration in due course. So, in short, I am now liable to pay tax. So, I will be collecting tax from you, but not now because right now I do not have the registration in hand. But just to inform you that now I am registered, so I have GST application. But the invoice that you are giving today to all these persons from 3rd October onwards is the Kacha invoice or the accounting invoice. What is accounting or Kacha invoice? Which cannot have GST component. But you inform them that, boss, whenever registration come, I will give you the Pakka invoice. Now, this accounting invoice which you have given, which is not having GST, which is not allowed, you cannot collect GST, you cannot show GST, will now be replaced by the Pakka invoice from 5th November onwards. So 5th November onwards, what you are allowed to do is all transaction you did between 3rd October to 4th November or to 5th November, you have given Kacha invoice. You can give a substitute invoice for that, which is the Pakka invoice, which is having the GST component from 5th November onwards for the past period, which is 3rd October onwards. So this Pakka invoice, which is replacing the Kacha invoice, is what is called as the revised invoice under GST. So first question, whether revised invoice can be issued, answer is yes. And then the second question, if your answer is in affirmative, determine the period. Now, what is the period for which revised invoice can be issued? Answer is 3rd October onwards. So 3rd October to 4th November, you can revise the invoices. First question. Second part, also the last date up to which the same can be issued. So the answer is, the law says the date on which you get the registration number, which in our example is 5th November, you have 30 days to complete this revision process. So what is the last date up to which you should revise all the previous invoices is you should count 30 days from 5th of November. So somewhere this 30 days will end on
December 5th.
5th December,
December
4th.
5th, sir.
4th December, I think so. It will end on 4th December because 5th will be counted. 5th November will be counted because from 5th November you will give regular invoice. So up to 4th November only you have to revise. So 5th will be counted from 5th, count 30 days, it will end on 4th of December. So up to 4th of December, you should revise all your earlier period invoice. And what is that earlier period? It is 3rd October to 4th November. Is this clear, students?
Yes, sir.
Yes.
Perfect. Please read question 3.
Discuss the provisions relating to issue of an invoice document in the following circumstances. First, advance payment is received against a supply, but subsequently no supplies are made.
So you received advance payment, but eventually supplies were not made. So what are the documents required to be done over here?
So refund voucher we have to give.
No, first what? First what?
First receipt voucher.
Yes, very good. So first, when you receive advance, if it is advance of service, you have to pay GST immediately. So you will give them the receipt voucher. In that month, you will report the receipt voucher in GSTR1 in the advance table and pay the tax. Then future in the month, whenever supply, if it would have happened, you would have prepared the invoice, given the invoice and reported the invoice in GSTR1 in the invoice table and reported that earlier advance again in the advance table, but which table? Advance cancelled or advance converted to sale. So this is how reporting would have been done. So you were supposed to first issue receipt voucher. Now in this case, since supply has not happened, then whenever you decide that supply will not happen for whatever reason, you will now issue a refund voucher and you will refund back the entire amount with GST component, and then you'll report this refund voucher in your GSTR1, and you will now also be able to subtract the GST portion from your current month's taxable output and tax payment. So that will also get knocked off. To that extent, you will pay less tax in the current month. Please proceed.
Goods are sent on approval for sale or return and are removed before the supply takes place.
So, what is the document?
This invoice issued before or on the when goods are sold or within 6 months.
Nice. So see, the question is not about what you are mentioning is correct. It is time of supply. Here we are on document. The question is about which
Is it delivery challan?
Perfect. So you have to issue delivery challan. Correct. So delivery challan will be issued at the time of removal, because you also have to prepare e-way on the basis of this document. So this document is delivery challan. And then what you mentioned, as per the time of supply, which can be maximum 6 months, whenever the confirmation comes, if it comes before 6 months, if not, then on the end of 6 months, you will prepare the tax invoice.
This also we have to mention, sir.
You should mention it is though not required, because here they are only mentioning about the removal part. So you need not mention this. You only mention that delivery challan has to mention, and then mention just one line small that in future, whenever the confirmation will receive, you will simply do what? You will issue tax invoice. Correct? Next part is
Mr. Mohan provides continuous supply of service to its client where the due date of payment for such a service is not ascertainable. No advance has been received in this behalf.
So again, we are not dealing with time of supply. What it is saying, we have to find out the document. What it is saying, Mohan has provided continuous supply of service where the due date for payment of such service is not ascertainable. So if it is not given that when the due date of payment is, then, but they are asking document. Na? What is the document here? I don't think there is any.
We have to give tax invoice, but it should be given on the date when we receive the payment.
So I think this should be the correct answer. So in short, we are linking it with the time of supply. So the answer, what you say, I believe that is also that is the correct answer. So you have to issue tax invoice the date when you actually receive the payment. I think this is the answer. Next. Please read.
Yes, Pari and Sons is an unregistered dealer of taxable supplies in Kerala. On 10th August, aggregate turnover of Pari and Sons exceeds 20 lakhs. The firm applied for registration on 27th August and was granted registration certificate on 1st September. Under CGST rules 2017, you are required to advise Pari and Son as what is the effective date of registration in its case. It has also sought your advice regarding period for issuance of revised tax invoice. Same question, sir.
Now, simple. You'll check what is the date on which you are liable to register. What is the date on which you are liable?
27th August.
No,
10th August. 10th
10th
August.
August. 10th
10th
August.
August.
10th August one.
You are liable for registration because your turnover crossed the limit. Second, have you applied within 30 days?
Yes,
Yes.
sir.
So you have satisfied the requirement from your end, you are done. Now you get registration on 1st September, 1st October, 1st December. It makes no difference for you. Now, the question is, what is the effective date of registration? What is the effective date
10th
of
August.
10th
10th
August.
August.
it is 10th August, correct? Now, had you applied after 30 days? Just tweaking the question.
No.
No, within 30 days.
No. Had you applied? I'm just changing the
Okay,
question.
okay,
Had you
okay.
applied? Then
Then the grant of registration. The
exactly
date the registration has been granted.
like in this case, 1st September.
Yes.
That date would have become the date of effective registration. And then now they are asking what is the period for issuance of tax invoice. So firstly, I will issue tax invoice for period between 10th August to 31st of August, correct?
Yes.
Because 1st September onwards, I'll issue regular tax invoice. So revised invoice is 10th August to 31st of August. And I have to issue it within 30 days. So it will end on 30th of September,
Yes.
correct?
Yes, sir.
Perfect. So we have completed the second chapter. Now we will take our 15 minutes break. You all also can have some brunch, breakfast, whatever you want. And we will now come back and we'll go to the further chapter revision. Fine, students?
Sure, sir. Thank you.
topic, which is now maintenance of books and accounts, which is much simpler. Or I'll just skip the students because this is more theoretical. Chalo, let us go to payment of tax. Actually, this point is actually simple. What you need to understand is some provisions. What are the provisions? See, whenever you need to make payment of tax, you have to ensure that you have sufficient amount in your cash ledger. Now, in the ITC chapter, we studied the knockoff provision, that first IGST liability has to be paid using IGST credit, and then if the IGST credit is fully exhausted, then IGST liability can be paid using CGST and then SGST. Similarly, the IGST credit, if it is not fully exhausted against IGST liability, it will be knocked off against CGST and SGST liability in any proportion and ratio which we want. But after that, you need, in case your liability is more, you need to make payment through cash ledger. Now for cash ledger, you have these main heads, which are the taxes, which is called as major heads. And within these major heads, you have the subcategorization, that is CGST tax, CGST interest, CGST penalty, which is called as the minor heads. Similarly, in SGST, same minor heads, and you also have fees, others, etc. Now, what is important is, if you need to pay CGST tax, you cannot utilize the cash balance of IGST tax or IGST interest. In fact, for CGST tax, you cannot even utilize the cash balance of CGST interest. So it is very important that when you are depositing money in the cash ledger, it is deposited under the correct major and the minor head. If it is deposited wrongly, cross utilization of cash ledger is not allowed, point number one. However, in case, let us say, I deposited every money in CGST tax, entire 5 lakh rupees I deposited in CGST tax only. But I need so many payments to be done. So now they have introduced a form, some GST, PMT 9A something, by which I can shift the balance of one cash ledger. One cash ledger means from one head, major or minor, to another head, major or minor. So now using that particular form, I can shift my cash ledger balance within various heads, major and minor. Second facility that they have allowed is, let us say I have multiple GSTIN. So I have one GSTIN in Maharashtra, another GSTIN in Haryana. I can now even transfer my cash ledger of Maharashtra registration to the cash ledger of Haryana registration. That has also now been allowed, right? Now with this backdrop, let us see what is the question. So Nitya has following balances in cash ledger. Please read, students. Who will read for me? Student, who will read for me? Yes, Sachi, Indira, Geeta, who will read for me?
She furnishes return on a monthly basis. Her tax liability for the month of February for CGST and SGST was rupees 75,000 each. She failed to pay the tax and contacted you as a legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any. In order to optimize the interest liability as per GST provisions, she is willing to make any transfer from the cash ledger between any of the major or minor heads. As the case may be, she wants to pay the tax on 20th April. Other information. Date of collection of GST was 18th February. No other transaction after this up to 20th April. Ignore penalty and late fee for the transaction. For this transaction, no other balance is available.
So basically, what is the point? You have balance, sorry, not balance, you have a liability of February, which should be paid by 20th of March. But you did not pay it, you failed to pay the tax, and then on 12th April, the person comes to you. The person wants your advice as to how much tax, interest, penalty the person is required to pay. And in order to optimize the interest liability as per the provision, she is willing to transfer. So as I said, within your cash ledger, you can shift the balance from one account to another. So what can be done? Firstly, whether interest is applicable. And if it is applicable, let us say your CGST tax liability is 75,000, only CGST, right? And you have a cash ledger balance in CGST of 40,000. My question to you all is, interest is applicable on which amount? Is it 75,000 whole, which is your tax liability, or is it net because you already have 40,000 here? Yes, students, what according to you is the correct amount on which interest shall be applicable? Anybody? See, the law originally said that you have to pay on entire 75,000. Later on, of late, we have an amendment which says that whatever is the balance in your ledger as on the date on which the payment was supposed to be made, that much balance has to be reduced and you have to pay interest only on the remaining. So let me read the answer from here for better understanding of or better explanation. Yes, can you please read the answer, beta?
As per section 49(10) of the CGST Act 2017, any amount of tax, interest, penalty, fee, or any other amount available in the electronic cash ledger under the CGST Act 2017 can be transferred to the electronic cash ledger for integrated tax, central tax, state tax, union territory tax, or cess in such form and manner and subject to such conditions and restrictions as may be prescribed. Thus, amount entered under any minor head, tax, interest, penalty, etc., and major head CGST, IGST, SGST, UTGST of the electronic cash ledger can be transferred to any other major or minor head. Consequently, cross utilization among major and minor head is also possible.
So first part they are saying that you can shift the balance. I'll just correct this last sentence. According to me, we should not say cross utilization is possible, because say cross utilization means that I am having balance in IGST tax and I can directly use it for making payment of CGST tax. That is not allowed today. But yes, I will do what, as I said, there is a form, some GST, PMT, 9A something, using which you will first shift the balance from IGST tax to CGST tax, and then you can pay it. So I will just slightly like to correct the last sentence. Instead of saying cross utilization, I will say that first or cross transfer is allowed, and after cross transfer you can do the utilization. So this first part I explained at the start, that now balances internally can be shifted from one major minor head to another major minor head. Now comes the main part. Now we have to decide on the interest. Now technically your liability is 75,000 which is not paid, which you are going to pay 1 month late. Question is whether the credit cash ledger balance already there, so you have 40,000 balance there, will it be adjusted to compute the interest or it will not be adjusted? Please read.
Further, as per Rule 88B of the CGST Rules 2017, where any amount has been credited in the electronic cash ledger as per provisions of Section 49(1) on or before the due date of filing the said return, but is debited from the said ledger or for payment of tax while filing the said return after the due date, the said amount shall not be taken into consideration while calculating such interest if the said amount is lying in the said ledger from the due date till the date of its debit at the time of filing of return.
So what is this language meaning? So it simply means whatever amount is already there lying in your cash ledger, we will not take into consideration. Means in simple words, that much amount will be reduced from your liability. and you have to pay interest on the balance liability. Now, interesting point over here is, in this part, they are not mentioning the amount which is credited to your respective major or minor head. It simply says the amount which is lying in your cash ledger. Now, in our given sum, I have a good decent amount lying in cash ledger. The only problem is it is lying under different major and minor heads. Whereas what I have to pay today is the amount of CGST or SGST tax only, where I only have 40,000. Now the question is how to interpret this part, that whether whatever amount I've credited in IGST major head with all its minor head and also CGST and SGST, but in other minor heads like interest, vagara, can that also be reduced? So the answer is yes, because the law has only used the word cash ledger. It does not use the word respective major or minor heads. It means the total amount in cash ledger, though kept in other heads also, can also will also be considered when you are finding about the interest. And that is where now what you'll have to do is you'll have to first shift the cash ledger balance all to the CGST and SGST tax to find out now what is the total amount of cash ledger which you have to reduce from that 75,000 liability. Continue, Vida. Continue. Yes, who was reading? Please continue from here. Okay, I'll read. Thus, as per 4910, read with Rule 88B, since the amount available in the electronic credit ledger, cash ledger, from the due date till the date of its debit at the time of filing return is more than the GST payable. So when you add up the entire amount, you'll find that the total amount in cash ledger exceeds 1,50,000, which is double of 75,000, which is your liability. Hence, no interest is required to be paid. Only the thing you have to do is you have to shift the balances. How? So you already have 40,000. So balance 35,000, you have to shift to your CGST tax head so that whatever is the balance required, that will be zero, and then you pay off your entire liability. Is this clear?
Yes, sir.
Problem, Geeta. Great. So now let us go to the second question. Yes, who will read? Kindly read. Sachi, kindly read.
A makes intrastate supply of goods valued at rupees 50,000 excluding taxes to B within state of Karnataka. There is no input tax credit balance available with A. B makes interstate supply to X Limited located in Telangana after adding 10% as its margin on the value of goods excluding taxes. Thereafter, X Limited sells it to Y in Telangana intra-state sale after adding 10% as his margin on the value of goods excluding taxes. Assume that the rate of GST chargeable is 18%, CGST and SGST at 9% each, and IGST chargeable at 18%, and every person involved in the aforesaid supplies are registered taxpayers. Calculate tax payable at each stage of the transactions detailed above. Wherever input tax credit is available and can be utilized, calculate the next net tax payable in cash. At each stage of the transaction, indicate which government will receive the tax paid and to what extent.
Fine. So the question is about a simple case scenario where everybody is adding some value. So we come to the first transaction where A is selling to B. Now it is an intrastate supply. So A will charge half CGST, half SGST. So on 50,000 sale value of A, the tax liability at the rate of 9% comes to 4,500, 4,500. He will collect this 9,000 tax from B, and it is mentioned that A is not having any balance in his credit ledger. So what will happen? A will have to make this entire payment of 4,500 in cash to the government. So to which government it will be paid? 4,500 is paid to central government and 4,500 to the local government, the state government, since it is an intrastate supply and the local state government is Karnataka. Now in second part, B has added 10% margin. So 10% margin means the purchase of 50,000 will be sold as at 55,000. Now B has made interstate supply. So on interstate supply, B
IGST.
will pay, yes, IGST applicable at the rate of 18%. So it comes to 9,900 minus whatever it purchased from A. The credit of CNS is available. Now we all know for IGST liability, you have to first use IGST credit, but it is not here. And once IGST credit, if available, utilize it, still you have IGST liability, you will use the C and S credit. So now here, B is going to use the C and S credit, so that will be reduced, and the balance amount will be paid by B to the central government because it is IGST liability. Next comes a third leg where now X is supplying to Y again within the same state. Now again, X has to add 10% margin on the purchase cost of 55,000. After adding 10%, the sale price of now X will become 60,500. CGST, SGST will be applicable because it is intrastate. And now the tax payable is, now X has received IGST credit. Again, IGST can be utilized against both CNS, and interestingly, it can be utilized in any ratio. So here we have first utilized fully IGST against CGST liability, and then balance IGST against SGST liability. I could have utilized equal also, that is my choice. Here they have done it like this. Now, what is given? The credit of IGST shall be first utilized against IGST, but we are not having IGST liability here. The amount remaining may be utilized towards payment of CNS in any order. So it can be utilized in any order and in any proportion. Here we have first nullified entire C and then S. Hence there is no payment to be made with respect to IGST. So its credit balance will be directly utilized for CNS in any order. Correct? So that is what is the simple example and transaction. So I think we will take now question number 8. It appears to be a big question, so let us deal with question 8. Please read.
Manihar Enterprises, registered in Delhi, is engaged in supply of various goods and services exclusively to government departments, agencies, etc., and persons notified under Section 51. It has provided the information relating to the supplies made, their contract values, and the payment due against each of them in the month of October, respectively, as
What is
under.
Section 51, students? What is Section 51?
TDS.
Perfect. And under GST, when TDS is applicable? When TDS is applicable and at what rate?
If the invoice value exceeds 2,50,000,
Very good.
exclusive of taxes,
Okay.
and IGST it is 2%, and SGST, CGST 1%.
Most important point, for which supplies it is applicable?
Taxable supply.
Nahi, to whom?
To whom it will be applicable? To government
Exactly.
department.
Only
Or
to
government.
Government.
private supplies, it is not applicable. Now they have already mentioned that your supplies are made to government, right? Now, since your supplies are made to government, TDS is applicable. This you have to keep in mind. Now, the total contract value is given, and second, payment due in this current month is given. Now, why this payment due is important? Because on this amount, you are required to pay your GST liability. Also, TDS will be deducted by the government on these respective amounts. Correct? Now, here there are different values. We have to check the applicability of TDS also for each of the values. So I'll just request you just read this. You need not read the amounts. We'll just read the captions. Please read the particulars.
Supply of stationery to Fisheries Department, Kolkata. Supply of car rental services to Municipal Corporation of Delhi. Supply of a heavy machinery to public sector undertaking located and registered in Uttarakhand. Supply of taxable goods to Delhi office of National Housing Bank, a society established by Government of India under the Society Registration Act 1860. Interior decoration of Andhra Bhavan located in Delhi. Service contract is entered into with the government of Andhra Pradesh, registered only in Andhra Pradesh. Supply of printed books and printed postcards to a West Delhi post office out of total contract value of 9,72,000. Contract value for supply of books exempt under exempt from GST is rupees 7 lakhs, and for supply of printed postcards taxable under GST is 2,72,000. Then comes seventh, maintenance of street lights in municipal area of East Delhi. The maintenance contract entered into with the Municipal Corporation of Delhi also involves replacement of defunct lights and other spares. However, the value of supply of good is not more than 25% of the value of composite supply. Composite supply and in activity in relation to any function entrusted to a municipality under Article 243W of the Constitution.
What is the relevance of this? That the activity is in relation to the functions of municipality and the value of goods does not exceed 25%. What is the relevance of this?
For composite supply.
No. The relevance of this is this supply is exempt under GST. So when you are making a supply, which is part of a function entrusted to the municipality under 243W, and it is a composite supply in which goods portion is not more than 25%. When both these conditions are satisfied and you are making the supply to government or local authority, then that particular transaction is exempt. Now, what are you required to determine? Amount of tax revenue to be deducted. So TDS is to be checked. The rate of GST is given. Also, will your answer be different if Manohar is registered under composition scheme? Now, what is very interesting to notice, Manohar is registered in Delhi. Now we have to check each of these transactions from the perspective of TDS, correct? Yes, please read, Beda.
As per Section 51, read with Section 20 of the IGST Act 2017 and notifications number 50/2018 CT dated 13/9/2018. Following persons are required to deduct CGST at 1%. Effective tax rate is 2%, 1% CGST plus 1% SGST or UTGST or IGST at the rate of 2% from the payment made or credited to the supplier, deductee of taxable goods or services or both, where the total value of such supply under a contract exceeds 2,50,000.
Now, with whom the contract should be, that list is given. I'm just ignoring this list. So this TDS will be deducted only by these persons. Continue.
Further, for the purposes of deduction of tax, the value of supply shall be taken as the amount excluding CGST, SGST or UTGST, IGST and GST compensation cess indicated in the invoice.
So that is what is discussed earlier, that the tax portion has to be excluded when you are determining the value of supply for the purpose of tax deduction. So the tax is to be deducted on the net amount, not on the gross amount. That is obvious because you cannot deduct tax on tax. Continue.
Since in the given case, Manihar Enterprise is supplying goods and services exclusively to government departments, agencies, etc., and persons notified under Section 51, applicability of TDS provisions on its various receivables is examined in accordance with the above mentioned provision as under.
Now we'll go to test whether TDS is applicable in each of the transactions. Now for first transaction, no TDS. Second transaction, no TDS. Third transaction, there is TDS, which is IGST. Fourth is C plus S. Again, then no TDS. Now the question is, why no TDS? This is to be understood. Please read the notes.
1. Being an interstate supply of goods, supply of stationery to Fisheries Department, Kolkata is subject to IGST at the rate of 18%. Therefore, total value of taxable supply, excluding IGST, under the contract is as follows. It is 2,60,000.
Okay, so the amount comes to 223.39 by back calculation.
2,339.
So it means the amount excluding GST portion is below 2.5. Since it is below 2.5, Hence, TDS not
Not
applicable.
required to deduct.
Perfect.
Being an intra-state supply of services, supply of car rental services to MCD is subject to CGST and SGST at the rate 9% each. Therefore, total value
Again,
of
by back calculation, the net value of supply is exact 250. Now, this is interesting to note. The law applies only when, that is, the TDS applies only when the value exceeds 2. Since it is exact 250, again, no TDS. Next.
Being an interstate supply of goods, supply of heavy machinery to PSU in Uttarakhand is subject to IGST at the rate of 18%. Therefore, total value of taxable supply excluding IGST under the contract is as follows. It's 5 lakhs.
So now, since all the conditions are satisfied, now TDS is applicable, but TDS is only on the amount which is taxable in that month. So TDS will not be on the gross amount. It will be only on that 25,000, which is that month's supply, correct? Out of the total supply. So that is why it is 2% of 25,000. So 500 rupees. And since it is interstate, the tax levied is IGST. Hence the TDS is also deducted under IGST. Go ahead.
Being an intrastate supply of goods, supply of taxable goods to National Housing Bank, Delhi is subject to CGST and SGST at the rate 9% each. Therefore, total value of taxable supply will be 5,50,000. Fine. Since total value of supply under the contract exceeds 2,50,000, National Housing Bank Delhi is required to deduct tax at the rate of 2%, 1% CGST and 1% IGST. SGST.
Correct. Next.
Proviso to Section 51(1) of the CGST Act 2017 stipulates that no tax shall be deducted if the location of the supplier and the place of supply is in a state or union territory which is different from the state or, as the case may be, union territory of registration of the recipient.
This is important. So it simply means that where supplier is of state X, place of supply is, let us say, state Y. So both states are X and Y, and the government to whom the supply is made is in state Z. Now, since the government is having no connection with either the supplier state or the POS state, then the government, despite of other conditions being satisfied, will not be deducting TDS. So what does this important proviso of this section says? That no tax is to be deducted if the location of supplier and place of supply both are in a state which is different from the state of the government. As I said, supplier is state X, recipient is, so not recipient, the place of supply is state Y, but the government is of state Z. So since the government state is not matching with any of these states, that is why TDS will not be applicable. Continue.
Section 12(3) of the IGST Act 2017 inter alia stipulate that the place of supply of services directly in relation to an immovable property, including services provided by interior decorators, shall be the location at which immovable property is located or intended to be located. Accordingly, the place of supply of the interior decoration of Andhra Bhavan shall be Delhi. Since
in
the
this
location
case,
of
Andhra government wants Andhra Bhavan to be constructed, but in Delhi. Now, in this particular case, if you remember, supplier is of Delhi, and because it is a construction of immovable property, the place of supply will be the location, which is Delhi only. So the supplier will be levying C plus S, but S of Delhi. Now here the recipient is government of Andhra, which is in Andhra. So government of Andhra is in state Z. Place of supply and location of supplier both are state X, because both are same, so both are X. But since Andhra government, that is the recipient who has to deduct this TDS, is in a different state completely, it cannot deduct the TDS. Continue.
Since the location and the place of supply is Delhi and the state of registration of the recipient is government of Andhra, so no tax liable to be deducted in this given case. Fine. If the contract is made for both taxable supply and exempted supply, tax shall be deducted if the total value of taxable supply in the contract exceeds 2,50,000. Being an intrastate supply of goods, supply of printed postcards to a West Delhi post office is subject to CGST and SGST at 9% each. Therefore, total value of taxable supply excluding CGST and SGST under the contract is as follows.
So since now the value of taxable supply, because see logically, this applies even in income tax. In income tax also the logic is same. TDS is to be deducted only of taxable incomes, not of exempt income. Similarly, here also TDS has to be deducted only of taxable supplies, because on exempt supplies where no tax liability will come, then why TDS will come? So on that logic, since the taxable value, the net taxable value is below 2.5 lakhs, hence TDS will not apply in this case. Next.
Composite supply of goods and services in which the value of supply of goods constitute not more than 25% of the value of the said composite supply provided to inter alia local authority by way of any activity in relation to any function entrusted to a municipality under Article 243W of the Constitution is exempt from GST. Thus, maintenance of street lights, an activity in relation to a function entrusted to a municipality in municipal area of East Delhi, involving replacement of defunct lights and other spares where the value of supply of goods is not more than 25% of the value of composite supply, is a service exempt from GST. Since tax is liable to be deducted from the payment made or credited to the supplier of taxable goods or services or both, no tax is required to be deducted in the given case as the supply is exempt. The answer will remain unchanged even if Manihar Enterprise is registered under composition scheme. Tax will be deducted in all cases where it is required to be deducted under Section 51 of the CGST Act 2017, including the scenarios when the supplier is registered under composition scheme.
So the answer, all above answers will remain same, even where composition scheme is applicable to the supplier. Sure. Let us go to the next chapter, which is e-commerce transaction. Please read.
StarCart Limited owns and operates a web portal in the name of StarCart and is registered with jurisdictional GST authorities in Delhi as an electronic commerce operator and is liable to collect tax at source under Section 52. StarCart provides listing service to various sellers for selling the goods to ultimate customers. Besides this, StarCart also sells its own products through the same web portal. For the listing services provided to sellers, StarCart charges a listing fee at the rate of 10% of the turnover of goods sold by the seller in a particular month. Such listing fee is recovered from the seller irrespective of any return of goods sold through StarCart. The customer can choose from wide range of goods listed on the web portal and place an online order for goods. Payment is made by the customers through the payment gateway in an online mode only. At the time of monthly settlement, StarCart makes the payment to the sellers after adjusting the tax collection at source at the applicable rates. Invoice for goods sold on StarCart is issued by the seller in the name of customers and the tax is charged on the basis of location of seller and customer. Goods are shipped directly by the seller to the customer and there is no responsibility of shipping the goods on StarCart for such third-party sellers. In case of return of goods by the customer, shipping is arranged by StarCart. It charges a fee equivalent to 20% of the value of goods returned as cancellation charges and refunds the balance amount to the customer. Further, 10% of the value of goods returned is collected from the seller by StarCart as handling charges for return of goods. In the month of January, Pulkit, a resident of Rajasthan, purchased following goods from StarCart: laptop having a value of rupees 50,000 and a printer having a value of rupees 10,000. Both the products are sold by Infocon Limited, a seller listed on StarCart and registered under GST in the state of Uttar Pradesh.
Continue.
Then mobile phone having a value of rupees 30,000 sold by StarCart in its own capacity. Then CCTV camera system having a value of rupees 1 lakh sold by Secure World listed on StarCart and registered under GST in the state of Gujarat.
So there are 3 sales, out of which one sale is of StarCart's own goods. Now please understand, when we are talking about e-commerce operator, what are the provisions? Whenever goods are sold through e-commerce operator app, the e-commerce operator is liable for TCS. So the seller itself is liable for making the payment of tax under forward charge, and the e-commerce operator is liable for TCS. But here there is one very important point where the e-commerce operator is selling its own goods through its own app. In that particular case, obviously it cannot collect TCS from its own self. So that is the case where TCS will not apply. Right. So this is just one point about TCS. Now let us go to what is the question. So till now we had a lot of data given. Firstly, the business model was given, and then these three sales are given. One sale of laptop, another sale of mobile, and third is sale of CCTV. Out of these, this sale of mobile phone is the goods belonging to the e-commerce operator itself. Continue.
All the amounts given are above are exclusive of GST wherever applicable. The opening balance of input tax credit for the relevant tax period for Starcart Infocom Limited and the Secure World is nil. Further, there is no other inward or outward supply transaction for Starcart Infocom Limited and Secure World in January apart from the aforementioned transactions. Subject to the information given above, assume that all the other conditions necessary for availing ITC have been fulfilled. GST is applicable on all inward and outward supplies at the following rates unless otherwise specified. It's CGST 9%, SGST 9%, IGST 18%. Compute the net tax liability including amount collected as TCS of Starcart Limited and the net GST payable in cash after set of credits if any of Infocom Limited and Secure World for the month of January.
So simple, we have to compute tax liability. Now in this case, Starcar has two types of tax liability. One, on the sale of its own goods, it has to discharge GST. And on the sale of other person's goods, it has to discharge TCS. So let us see, read.
Computation of net liability including amount collected as TCS Starcart Limited for January. TCS to be collected from Infocom Limited on supply of laptop and a printer of to Pulkit. Starcart is an ECO since it
ECO.
owns and operates a web portal through which Infocom Limited supplies goods. Further, IGST is applicable on the said interstate transaction since supplier Infocom Limited is located in the state of Uttar Pradesh and the place of supply is Rajasthan. That is where the movement of goods terminates in terms of Section 10(1)(a) of the IGST Act 2017. The Starcart will collect TCS at 0.5% of 50,000 plus 10 and 60,000 0.5% will have.
Achha, I forgot to ask, what is the TCS rate? What is the TCS rate?
Sir, 1%.
I also remember 1%, but here they have given 0.5.
0.5%. Why I was also remembering.
1 second, we'll just check.
I think it is 1% only.
I also remember one, and I don't remember there is any amendment in this. But at the same time, I also recall something 0.5. Now, whether that 0.5 is a half because of CGST, SGST, but then see, I think it has been reduced. So 1% has, I think, been reduced to 0.5. It is 0.5, beta. Okay. ठीक है. But again, see here it is given 1. But I think there is amendment not done in the revision part, because I also recall there was some change of 0.5%. This is registration.
Sir, it is 0.5 CGST, 0.5 SGST. Google, I searched Google.
I don't believe in Google, beta. Just let me find the. Now see again, it is 0.5 written, but again 0.5 of CGST or 0.5 total. See, now here it is 0.25. That's what I'm saying. Okay, I remember there was some amendment. So it is 0.25 under each act and 0.5 under IGST. So the total rate is 0.5 only. But earlier it was 1. Now it is reduced to 0.5. Fine. Is this clear to all? Students,
Yes.
0.5 is the total rate. Yes, go ahead.
GST to be paid by StarCut on supply of mobile phone made on its own account at the rate of 18% IGST of rupees 30,000. IGST is applicable on said interstate transactions since supplier StarCut is located in Delhi and place of supply is Rajasthan. That is where movement of goods terminates in terms of section 10(1)(a) of the IGST Act. Since the supply has been made by StarCut on its own account, no TCS needs to be collected. Fine. TCS to be collected from Secure World on supply of CCTV camera system to Pulkit. ECO StarCut is liable to collect TCS on this transaction. Further, IGST is applicable on the said interstate transaction. Since supplier Secure World is located in the state of Gujarat and place of supply is Rajasthan. Therefore, that is where movement of goods terminates in terms of section 10(1)(a) of the IGST Act 2017. Thus, StarCut will collect TCS at 0.5% of rupees 1 lakh.
So, for out of the 3 transactions, for your own transaction, that is where you are selling your own goods, even though you are using the same portal, but since it is your own goods, here you step into the shoes of supplier, so full GST is applicable. And where you are only acting as ECO, you are only liable for the TCS portion. Now, besides all this, since you are a ECO, you are charging some fees from all these suppliers. So whatever is the fees you have charged to both of them, that is Infocom Limited and Secure Limited, on that fees, you will be liable to pay GST. This is supply of service from your end. Correct?
Sure.
Let us take one more type of question from here. Yes, let us go to question 5.
A is an e-commerce operator supplying goods through its electronic portal. Capacity of an agent. The goods belong to B and the consideration for such supplies is received by A and remitted to B as per the contractual agreement. A requires your help in arriving at the rate at which tax shall be collected from the amount which is received by it against the supplies.
So now A is the e-commerce operator, but the point given is A is also acting as the agent. Now, since you are acting as the agent, if you remember, in GST law, the agent itself is also required to pay GST. So you act as a supplier towards, means whenever you are making a sale on behalf of the supplier as an agent, you are liable to pay tax in the capacity of the supplier. Hence, since you become supplier, in that particular case, the answer is A, being an ECO, is supplying goods through electronic commerce operator in capacity of agent. So agent means as good as supplier, and hence the liability to collect tax under TCS shall not apply, because now since you are agent, you have to pay the full tax as a supplier. You will not fall in the TCS provisions. Fine. Let us go to the last chapter, students. So in the remaining 15 minutes, we'll try to cover something from the returns chapter also. Chalo, question 5. Please read.
Mr. Anand Kumar, a regular taxpayer, filed GSTR 1 for the month of August before the due date. Later in the month of February next year, he discovers error in the GSTR 1 of the month of August, already filed, and wants to revise it. You are required to advise him on the future course of action in this scenario.
So you filed August return in which you committed a mistake. My question is how to correct the mistake and whether I can revise August month's returns. Yes. Can I revise August month's returns to correct the mistake? Students.
Through GSTR 1A we can?
No. See, but a 1A also has a very limited application. 1A is correction in the same month, firstly. Secondly, it is for correction of mistake in GSTR 1. So let us say now today is 13th of February. I filed my GSTR 1 on 11th. And now I have to file my 3B on 20th. Now between this gap of 11th and 20th, I identify some mistake in my GSTR 1. Now you all know GSTR 1 figures are auto-populated in GSTR 3B, correct? Now if I want to correct my mistake in GSTR 1, either because I have identified or my recipient has informed me, because what I upload in GSTR 1 is communicated to my recipient. Now to correct this mistake, I have this another document or another return called as 1A. As per this 1A, I am allowed or it is possible for me to correct what I have done wrong, but only in the same month's GSTR 1. So this is of earlier month. So in this example, we want to correct return of GSTR, we want to correct GSTR 1 of August in the month of Feb. Till this time, 1A is not applicable. 1A is only for the same month's mistake. So your thought process is good, but here it is not applicable. So let me first inform you students, there is no provision of revising returns in GST. So return 1 file becomes concluded. However, if there is any error, omission, mistake in earlier periods data, that can be corrected by using the amendment table in the future month's return. So there is one table called as the amendment table. So now let us say when I'm filing, now I'm in the month of Feb and I'm filing the January return in Feb, for example. So now we are in Feb, actually we are in Feb. Today we are filing the January return. And let us say in this same example, I got to know that there was some mistake committed by me in my August month return by way of putting wrong supplier's number, putting wrong value, wrong tax rate. What I can do is in the current month's GSTR 1, I will go to the amendment table. And in that amendment table, I will type the invoice number. Now this invoice number pertains to August. But the moment that I type the invoice number, that invoice details get open in the amendment table. What details are open? Invoice number I have typed. So date of invoice, supplier's name, supplier's GST number, value, HSN, whatever. All the details that you upload in GSTR 1 are open. Now let us say I want to correct the GST number because I have wrongly put some other supplier GST number. I can do. I have put some wrong value, like instead of 10,000, I added one more zero, made it 1 lakh. I can now reduce that to 10,000. So all these corrections I can do in my subsequent month's return. So like in this February, when I'm filing January month's return, I can do correction of the mistakes which I committed in my August month's return. So this is the course of action which is applicable to me. Next.
B Limited has filed the return for the month of October belatedly. At the time of computing the late fee to be paid for delay in filing return, B has taken a view that if the late fee has been paid as per the provisions under CGST Act, there is no requirement of paying the late fee under SGST Act for the same default. Whether B Limited has taken a correct view, examine.
What is your view? What is your view?
He has to pay for both
He has to
CGST.
pay for both the things.
Because the fees are given per act. So if
He
you
will
are
be liable
late,
to be paid for
yes,
both.
both the acts. Both the acts, correct. A is 8 is a bigger question. We'll go to 8. Please read 8.
ABC Limited applied for cancellation of GST registration in the month of March. In the month of September, the consultant of ABC Limited suggested to furnish the final return in said month.
Which is the form of final return, students? Which is the form of final return? It is GSTR 10. So whenever a person closes his business and when they are closing the business, they have to file a final return. Final means anything left out in your entire history of business, you are allowed to put it in that GSTR 1 so that in future there will be no liability on you, there will be no action on you on the pretext that you have missed doing something. Yes, go ahead.
He advised final return in the said month. He advised the company that a final return needs to be furnished before the due date of furnishing the return for the month of September of subsequent financial year or before furnishing of annual return for the financial year in which cancellation has been sought for, whichever is earlier. However, the jurisdictional authorities have yet not posted the other order of cancellation due to reasons not known to ABC Limited. Whether the advice given by the consultant of ABC Limited is correct, examine.
In short, the basic moot question is that you have not received the cancellation order. Can you still file GSTR 10? So your consultant actually has advised correctly that if you are going for cancellation, you have to file the last return, which is GSTR 10, which is the final return. But here, practically, even though you applied for cancellation, the officer has not yet passed the cancellation order. So in short, your cancellation is not yet concluded or completed. Now, in this case, what should be your stand? So I'll just directly go to that answer so that we get the theory part also. Please read.
No, the advice of consultant is not correct.
So obviously, if until unless the officer cancels, till then the cancel is not effective. Hence,
Yes.
see, otherwise the advice is correct. But the practical challenge is the officer has not given you cancellation order. Since the officer has not given cancellation order, so by default now there is nothing left. Yes, go ahead.
In terms of section 45, read with rule 81, every registered person who is required to furnish GSTR 3B and whose registration has been cancelled is required to file a final return within 3 months of the date of cancellation or date of order of cancellation, whichever is later. So in the given case, registration of the company has not been cancelled. Therefore, requirement of filing final return will arise only when the registration of the company gets cancelled.
So the advice actually was correct, but in the given facts of the case, since the cancellation is not completed, why not completed? Because the officer has not confirmed the cancellation. Until the officer confirms, you cannot treat it as cancelled. And since it is not cancelled, hence the final return is not triggered. Yes, question 9.
XYZ Limited has deducted TDS from the consideration payable to A Limited for supplies made by it. The deductee, that is A Limited, seeks your advice on taking credit for the TDS deducted by XYZ Limited. Also, whether the tax deducted by XYZ Limited will be shown in the electronic credit ledger for or electronic cash ledger of A Limited.
See, now one thing is when the supplier charges GST, you take the ITC of that GST. Here, the supplier has, not supplier, sorry, here the recipient has deducted TDS. So obviously the recipient is going to be government. Now the government deducts TDS. Now the question is when anybody deducts your TDS, or let us say the e-commerce operator has collected your TCS, because TCS in GST is only done by e-commerce operators. So whoever has deducted, collected TDS, TCS, now as a supplier, your TDS is deducted or your TCS is collected. What do you do of this TDS, TCS? Yes, can you tell me what happens of this TDS, TCS? Students, do you all know what happens of this TDS, TCS, which others have deducted or collected from you?
It will be reflected in your e-cash ledger.
Very good. So it appears as means the opposite person, they file their return in GSTR 7 and 8. Once they file their returns and they put your details correctly in their returns, it reflects in your cash ledger and you are given the option of accept. So once you accept, it gets added to your cash ledger. In short, the amount of TDS TCS becomes your cash ledger balance. So the answer is, can you take the credit for TDS? Answer is yes. And also where it will be shown in your cash ledger. So this is done. This is done. So students, basically we have completed all the questions also majorly. So students, I'm sure you all were able to understand majority of the provisions that we covered today, and we covered it again. 80% of the questions are covered. Whatever is left out plus all the past exam questions, I request you all to please refer all the material that we are uploading, we are hosting on our BOS portal. You have so much rich database in the form of MTPs, RTPs, past exam questions. Please refer them. They are very helpful guide. Yes, in relation to indirect tax, I will request not to refer past exam questions because there are regular amendments in indirect tax, but definitely the MTPs and the RTPs hosted for the current this exam, that you should definitely refer, because that MTP RTP will contain all the questions and answers as per the amended provisions. So only for the indirect tax law, that also only GST portion majorly, you should not refer the past exam question. You may refer, actually, it is not that you should not refer. You may refer. The only thing is that it may slightly lead to confusion in case you are not aware of the amendments, because the answers of past exam questions are as per the law which is applicable then. Now, if the law has amended, either you should know the amendments, then definitely you can refer to the questions, because see, everything is not amended. So other things which are relevant, even now, the answers will be relevant to you. Only where amendment is done, you will require to make the changes in the answer. So better is, I'll suggest that better to avoid any confusion, you should only refer our MTPs and RTPs. And let me tell you, that itself is a very detailed question bank. Even if you refer the MTPs and the RTPs that will be hosted, or if they are already hosted, I don't remember, that is sufficient, students. Too much sufficient for preparation of your exam. So you have module and you have the MTPs, RTPs. But please do refer to them. Please try to at least cover this much of material, that is the module, MTP, RTP. I can guarantee that once you cover this much, you will be through with your entire studies. Right, students? So with this, I think everything from my end is concluded. If you have any questions, if you have anything to discuss or ask, please put it across. If anybody has anything to be discussed or asked. No queries, students?
As of now, no queries.
Perfect then. So then let us conclude today's session. And again, we meet again later for the next topic. But in the meantime, please continue revising from all this material that I just suggested, and try to mark your doubts or queries so that I can address them in the future classes. So thank you, students. Thank you all.
Thank you, sir.
Thank you so much, sir.
Yes. Yes, Ashok ji. Good day to you.